Hello and welcome to the first stock market update of the new year. It's 3rd of January today, waited for the markets to get back open, see if anything's happening, and not a lot to report right now from our last update. As I said last time, there were signs of hope here when the price here was starting to poke its way above this descending moving average. By the way, how to read stock charts. If anything, at any time I'm making these broadcasts doesn't make any sense, on my channel you can go there right now, check out the how to read stock charts video. But it's fairly straightforward. This is price and this is the averages. That's what I'm looking at. But if we really look at trends and trend lines and stuff like that, the downtrend, this is the S&P 500, the main index, remains unchanged. You can see there, it's just this descending trend there. Trying to get above it there, but it's still looking to now test this further on down here. I mean, you have to burn itself out eventually. Where it goes from here is really anyone's guess, though. So that's what we're trying to see right here. But this is still very much a bear market. Although I will say it's a bear market in an otherwise 16-year up cycle. So this will not go on. And that's what we're waiting for, especially to align our trades with. We want to have our trades aligned with the market, the overall market. And when it's descending down like this, it's a bit of a pain, to be honest. Not to say that some individual stocks like TGTX, if you're on subscribe, if you go to the website, get your free quiz and subscribe, you'll get alerts like TGTX, which really don't care what the market's doing. Let's zoom in here. This is the daily chart, day to day, and that's the shorter term picture. We can see here over the last week or so, the market's gone into this little sideways pattern here, and it's kind of just trying to figure out what's going to go, what it wants to do next. This was the line of support here, gets broken, starts forming another little box down here, and it's really at an inflection point right now. And none of my other things I look at are really showing anything different other than just the market is just kind of trying to figure it out. Industrials are the same, although they're a little bit more optimistic. At least they're above that 40-week moving average. Nasdaq is even worse than the S&P. I mean, these lows here need to hold. If that breaks there on the Nasdaq around 10,400, then that's going to be very bad. And that's what this market may just need. Just a real quick shock crash, then it'll reset, and then everything will just be even cheaper than it is right now. And things are really cheap already. There's the small businesses there. Quick check-in on the dollar for you Forex traders out there. The vicious uptrend has been broken, and now it's here. Even the dollar is figuring out what to do next. That's anyone's guess here. But as it's still pretty much uptrending, but it could easily break into the low from here. Bonds, US Treasuries. This is the reason, by the way, that interest rates are high. They're saying it's inflation. What it was a short-term supply shock inflation, and sure enough, it was real. But the real problem, the real reason Fed is raising rates, regardless of what they tell you, is this chart right here. Nobody's buying US bonds, and the only way they can make them more attractive is by raising interest rates. In 2022 was an unusual year. Most investment funds have a 60-40 stocks bonds fund portfolio, so that in theory they can't go both down together, but actually look what happened in 22. That's absolutely what happened. So they're all scratching their heads. Markets are broken, and Federal Reserve is trying to fix it. And as you can see right here, not having too much luck so far, so you can expect more interest rate rises, unfortunately, as well. Copper, the indicator of the global economy. This is in a downtrend, and if the copper, this chart is anything to go by, it's bouncing up against this downward sloping 40-week here. They call it Dr. Copper. As copper goes, so does the global economy, because it's used in so many things and consumer products. Bit of an inflection point, but if I had to bet on this chart, the next move for copper would be down. Ethereum, GBT, the Bitcoin complex, is all really the same here, but the reason I look at Ethereum is because the only coin that actually makes any commercial sense to me. I'm sure there are others, but this is the main one, and still doesn't have a heartbeat off of the highs there, 10th of that. So not a pretty picture there either. Let's look at housing. This is the American housing market, and as you can see, there's that bubble you might be familiar with since 20 to 21, and it's leveling off here. Look how far it is above from its moving average. That's a long way from home, and the inevitable correction is underway there. So that's all for this week. Sorry I can't paint a better picture, but as I said, in individual stocks, which will be in the video I'm about to make next, there's a different story. certain stocks march to their own drum. But there's the stock market for now. Still a bear market. It won't always be so. We'll speak to you next time.